Good morning, good afternoon, and welcome again to the latest ADM Agriculture YouTube market update. I'm joined this week by my colleague Freddie Humfrey. Well, what a week that was. Incredibly volatile, lots of changes, and lots of different drivers. The market set off lower. Worries about falling demand due to the economic crisis, worries in Europe about bird flu, plus the confirmation that Russia would extend the grain corridor for an additional 120 days with no real changes to the terms, all added pressure to the market. The continuation of the shipping corridor and the availability of Black Sea wheat appears, on paper at least, to make the global wheat balance sheet more comfortable, even taking into account some of the weather issues that we're seeing in the US and Argentina. That said, though, there is a lot of flux in this market, and things are really lacking clarity. As we head into Thanksgiving week in the US, the American market is really struggling to capture any export demand as logistical issues continue to keep US prices relatively high versus the global export market. And in addition, the crop ratings for the recently planted US HRW are at record low levels, and with dry conditions persisting in this region, there's no specific relief. I touched on Argentina. Certainly South America generally has issues, and with the most severe effects being in Argentina, and certainly the RG crop is now probably no more than 11 or 12 million tons. So there's really no meaningful offers out of this South American exporter. That said, though, the big news for the week and what really turned the markets around towards the end of last week was the news that China had stepped back into the European market. There were reports that France had sold 4 cargoes of wheat to China, along with some barley. And then this news was added to by rumours that Poland had sold wheat to the US, which is a most unusual trade flow. I guess this was all happened simply because the sharp drop that we'd seen in EU wheat futures coincided with that rally in the US dollar at the start of the week, making EU the cheapest origin in the world for a few days, and really just highlighted how quickly grain prices can react to changes in parity. I think the other thing to look at, of course, is the technicals, and I think the technicals have become very interesting. Freddie, perhaps you could just give us a bit of an update on that.
Thanks, Jonathan. Yeah, so it's been an interesting week and a couple of weeks actually from the technical side of things. So as we can see here, this is the last couple of months on the London May 23 daily wheat chart. And the really interesting thing, I think, is since we saw that 303 high back in the early part of October, we pulled back and we intersected with this long-term trend A that you can see on the screen there. So that's a supportive long-term trend that's been in place actually since before the war, so January 2022. So it's been a very, very long time. We re-intersected with that in and around the 278 area, bounced off that support a couple of times, and then re-rallied to that overhead high of 290, where actually all of a sudden things started to change a bit from a technical perspective. So we had an inside day reversal in that little bounce uptrend, which then created the start of downtrend B that you can see there. So B started overhead at 290. It broke through the 278 and the long-term trend A, which is really quite significant, and then moved quite consistently all the way back down to within a pound of the July-August harvest low of 256. So actually trade at 257, which we've just circled there and labelled number one. So that number one actually was a bullish hammer reversal. So really starting to question whether or not downtrend B had any longevity further to the downside. Subsequently, we saw day 2 on the screen there, which was an outside bullish engulfing, and since then we've just been trying to interact and break this downtrend B. So markets had a really interesting choppy couple of weeks and couple of months, to be honest, from a technical side. I think the key points to take away is that long-term trend A that we saw starting the start of this year, that's now been broken with this downtrend B that interacted with the harvest low in and around the 256 mark. We've seen a little bit of a bullish engulfing pattern, which coincides with some of the indicators pointing higher as well. We're now seeing if this market can break this downtrend. If it can, then we see ourselves being in a 256 to 278 range, arguably 264 to 278, and then we go from there with that overhead resistance at 278 having been significant previously. Do we retest that? At the moment, we're a little bit away, a couple of days from breaking that downtrend, but certainly something to keep a real close eye on from a technical side.
Yeah, that's interesting, Freddie. Thanks for that. Yeah, certainly from a technical standpoint, it looks like we may be trying to put a base in, but I think we all remain concerned about the longer term output and point to demand issues, particularly bird flu, and then how domestic consumers are reacting to the impacts of this global recession. Perhaps, in short, any rally in the short term could be a good selling opportunity for the farmer. Great. Well, that's all from us today. Thank you very much for watching the video. As always, we're interested to hear any feedback you may have. Our contact details, as ever, are at the end of the video. Thanks again. Bye-bye.
Thanks, Jonathan.
Thanks, Freddie.